Hi guys, today we are going to discuss a scalping strategy. Since we are not looking at trades at the moment and considering the time, there is not much volume in the markets. We are just going to use Euro USD chart and I am going to use the previous hour as an example. Right, so this scalping strategy needs you to look at 4 screens. If you are fast enough to use one chart and then you can keep on checking each time frame. However, what would be easy to use would be using 4 screens. So you put your 4 screens up so that you can put different time frames: the 5-minute time frame, the 15-minute time frame, 30-minute time frame, and 1 hour time frame. So what you need is 4 screens, one with the 5-minute time frame, one with 15-minute time frame, and one with 30-minute time frame, and one with 1 hour time frame. That's what you need. And then the reason why you need 4 screens, like I said before, you need these 4 screens. You don't need to have 4 laptops or 4 computers. Just make your one laptop present 4 screens for you, because it's much easier to just have the time frames there, since you know that you're scalping and you don't have to keep on going back to lower time frames and jumping across screens all the time, but you choose what's best for you. All right, so this strategy should be able to give you a signal each hour, or at least you're using the 1 hour time frame for your signal confirmation. The other time frames just give you more confirmations on what you're looking for. It just tells you that price is higher chances of doing what you're expecting it to do, but there are other things that you also have to consider. So what you would need to do is you have to wait for the 1 hour time frame to close. You cannot come on the charts and look at what's happening right now and just decide to take the scalp position. You need to wait for the 1 hour time frame to close. So what you want is, if you're looking for a buy setup, right, you want the 1 hour time frame to close bullish. You want the 30-minute time frame to close bullish. So that means if we are looking at our previous 1 hour candle, which is this candle, right, we are looking at that 1 hour candle to close bullish, which it did. And then if we look at our 30-minute time frame, we should have a bullish 30-minute candle close, and this is our bullish 30-minute candle close. Then if we look at our 15-minute time frame, we should also have a bullish close, and our 15-minute time frame should have been this one. It didn't exactly close bullish, it closed bearish. So this would be your first signal if you would want to reconsider your trade, or if you're still confident with your trade, then you can just take it from there. I mean, you can also use it. So that would mean price closed it closed bearish, a pin bar, very small pin bar, bearish pin bar. It could have been a bullish one. All right, so we will take it considering how small it is and the area it is right now. It happened at a support, so that means it rejected a support, which could then push price higher. So we will consider it, right? And then from there, we want to see possibly a 5-minute bullish close, which is Highly unlikely because the last 15-minute closed bearish. So this is our 5-minute, which closed bearish also. It could have closed bullish if price had managed to push a little bit higher. But what I like about this the 5-minute candle and the 15-minute candle is that they happened at a support. So yes, it's not really going along with our rules. However, I would consider the fact that it happened at a support and this was a new high being created. So we had price create a low at this area, right? Then price pushed higher, it came back, and then it created a new low, which then pushed price higher. So yes, this could have been a good scalping trade. The only thing that you would have to be careful about would be our next rule. So normally when the 1 hour candle closes bullish, some would want the next candle, the beginning of this candle, to move at least 3 to 5 pips above this previous bullish candle, right? Our previous 1 hour candle. So some would want that candle, the next candle, to at least push 3 to 5 pips above our previous candle, right? However, as much as that's a good point to take note of, I would rather have you take note on the fact that price needs to create a lower wick before it pushes higher. So I would rather wait for price to create a lower wick, which would act as a retracement or a retest on the smaller time frames for price to push higher. So if my previous 1 hour candle closed bullish and all of the lower time frames are in line with that, right, I would then want to see price creating a lower wick first. That means if price doesn't give us the 3 to 5 pips above the previous candle, that's okay, because we want price to give us a lower wick. When price gives us a lower wick and then it comes to attempt to close above our previous 1 hour candle, that gives us more confirmation. A, it retraced. B, it's now closing above our previous candle. That will be our confirmation to enter. So what you could do is you could place a buy limit, just a few pips buy limit above your previous high. So you can watch price do whatever it does, give us our lower wick, retrace all at once, and then when it's going higher, when it's about to break out, it hits your limit and goes with your trade. That would be a good way of looking at it. We always need that lower wick. Right here we had the lower wick, this lower wick that's been printing, right? It could be seen as a retest. If we go on our 15-minute time frame, right, we could look at this lower wick as a retest because price created support, right, and we had a resistance right here, a range. Price broke out. This could have been a retest, and if price can manage to push higher, we can see it going higher. So you would have your buy limit, let's say maybe around here or just above here. That's where your buy limit would be. So when price moves higher, you enter your trade and price continues in the direction that you're anticipating, right? So that's how you would confirm your trade, or what the things that you're considering when you want to enter a trade. It's just the same thing when you're looking for a bearish setup. Let's say price had been consolidating above here, and then you see price is starting to give you some sort of a bearish setup. So you're waiting for the 1 hour candle to close bearish, and you're looking at your 30-minute time frame, your 15-minute time frame, your 5-minute time frame, to see if they all closed bearish. If the 5-minute and the 15-minute time frame closed bullish, either you can wait for the next 1 hour candle, or you can check where they presented themselves. Were they at a support? Were they at a resistance? If you are looking for a bearish setup, then you want those candles to be rejecting a resistance so that they can push price lower if they're going to be bearish. However, they should not be strong bearish candles, at least very weak bullish candles rejecting resistance. Then that could push price lower. But what you want at least is to see all those time frames closing with a bearish candle. That gives us more confirmation on our bearish trade. So it's the same thing, only that one is bullish and one is bearish. So we can see what are we looking for. So these are the rules that we are looking for. So you want 4 screens, right? Presenting a 5-minute time frame, 15-minute time frame, and 30-minute time frame, and your 1-hour time frame, right? Then after that, you're waiting for the 1-hour time frame to close. Excuse me, 1 hour to close. Right, that's what you're waiting for. So after your 1-hour time frame is closed bullish, you are now checking if the rest of the time frames is also closed bullish. Check if the M5, M15, M30 also closed bullish. Ooh, shit. Okay, you're waiting to see if they also close bullish, right? That's another thing to take note of, right? So what you can reconsider is if the M5 and let's say M15 closed bearish, then you are check where they presented themselves. And how they closed. Are they strong bearish candles or weak bearish candles? What you want is a weak bearish candle, a very weak bearish candle that's rejecting support that could push price higher. All right, so the next thing we are looking at is price, is the new 1 hour candle, right? The new 1 hour candle should give you a lower wick before it pushes higher, right? That's what you're looking for. The price needs to give you a lower wick before it pushes higher. The same thing we can see right here. Price gave us a lower wick before it pushed higher. So if you do not want to miss out on that trade, so if you don't want to miss out on that trade, right, that's when you put your buy stops above the previous 1 hour. For some people, they would like to wait to see how this new 1 hour candle is printing. So you're waiting to see if it gives you a lower wick and if it's going to push higher to break above our previous 1 hour candle, and then you just enter your trade manually. So it all depends with how you feel and what you want to see. So those are the things that we're looking for our trade. When you're using this strategy, right, it's best, let's just write it here, it's best if you look for an entry let's say on a pair or with a market structure that's at a support or resistance. That's what you want. Of course, you could look for it in a trending market, because since market is trending, higher chances that it might continue trending, right? If it's not near a strong support or resistance, chances are that it will continue going in that direction until it reaches somewhat of a strong level. Especially if there is also clean traffic to the left, it's most likely going to do the same thing. So that's all. If you are in a trending market, that's fine, but it would be best to look at this situation or for an entry on a market that's at a support or resistance, because if price rejects the support or resistance, it will aid us in what we are looking for next. So let's look at our stop loss and our TP, what we should look for and what we should expect. So on our stop loss, right? On our stop loss, it would be best to put your stop loss it would be best to put your stop loss below your 1 hour candle, below the 1 hour candle, right? Now this is a much more tighter stop loss, right? The much safer stop loss, because if price is going to break the low of our previous candle and close below there, it's most likely going to continue lower. However, when you put your stop loss below the 1 hour candle, right, just be careful of the fact that price could come to retest that low, take out your stop loss, and then it continues in the direction that you were expecting it. So it's just best to keep that in mind. Then some people prefer putting their stop loss, let's say 20 pips 20 pips below their entry. So 20 pips below entry. Remember, if you are selling, it's 20 pips above your entry. We're just using a bullish example. And then some would prefer putting your stop loss near a major support or resistance. So near a, or just below, near a major support or resistance, or just below a high or a support or resistance, or in this case support. If you're selling, resistance, right? Those are our stop loss recommendations, or what we look for when we're placing our stop loss. And then for your take profit, what you want is, you can enter one trade, right, and expect it to reach 50 pips using this strategy, right? Especially if you have clean traffic to your left and you're also using the method that we normally use in our normal trading, only that you would have used the scalping strategy to get your entry, right? So that's for someone who has a very small lot size and they cannot take out some of their trades, right? Some people would enter a big lot size trade, but they take partial TPs as the trade goes. So the first one, you can take partial TPs, right, at 10 pips, and then 20 pips and 30 pips, right? And then you can set your SL on break even. That's when you set your stop loss on your entry, or you can set it maybe a pip or 2 pips above your stop loss. You set above your entry, I mean, and then you wait for price to hit 50 pips. To hit 50 pips. Yes. All right. So if you don't want to do this, when you enter one trade and take partials as time goes on, right, then you just enter the amount of trades that you want to take. So if you want to take 10 pips, 20 pips, 30 pips, or and then 50 pips, then you enter those 4 trades. But if you want to take maybe 10 and 20, you enter 2. Maybe you want to take the first 10 and then you hold until you hit 50 whilst you're moving your stop loss as the trade goes on. That's also fine. So that's what I recommend. Now, if price is coming to hit your stop loss, you should be okay with that. If price is going to hit your TP, you should also be okay with that. Do not be greedy and do not be stubborn at the same time. So accept to be wrong at times, and also accept to take your profits, because when you keep closing your trades before they reach profits, you're not accepting that you're right. It's in some way you're still telling yourself that you were wrong. So should keep that in mind. Keep doing this over and over again, and it will become very easy. It will be very easy to follow and very easy to handle. You can use these things even when you're trading higher time frames, or when you're trading properly. If you see it set up and you're waiting for an entry, you can use to see how you can use this strategy to get your entry. So this can be a scalping strategy. This can be something that you can add on to your own strategy. I hope it all makes sense, and I hope that was good. And if you have any questions, please feel free to message me. If you want to add something, feel free to message me. I hope you all have a good day.